The greatest danger in speculation is not the market's volatility or its unpredictability. The deadly error is the blind, paralyzing hope that prevents you from cutting a loss and clearing your ledger. That hope is the most expensive thing you can purchase in the market. It costs you your entire capital, one painful dollar after another. I have seen more accounts destroyed by simple stubbornness than by any single crash or correction. The man who accepts his error and takes the small loss is still in the game, ready to fight the next battle. But the speculator who waits for a recovery is simply a fool waiting to be ruined. Price is the final arbiter of all market action. It is the absolute truth spoken by the sum total of every transaction. You must ignore all the clever narratives, the news headlines, and the endless opinions from the street. Until the market itself confirms the story you are being told, the story is simply a distraction and a lie designed to confuse you. The price on the chart is not a suggestion, it is a declaration of intent. My entire philosophy of speculation rests on accepting this declaration as fact, unburdened by outside commentary. Focus entirely on the movement of the quote, "Everything else is mere noise." Always identify the line of least resistance, which is the path the market will follow with the greatest ease. The job of the professional operator is not to predict the future, but to recognize this current of movement and flow with it, never attempt to block the railroad when it is clearly moving freely in a stated direction. Only the amateurs stand in the path of a confirmed trend, trying to pick a bottom or call a top. That is a game of ego, and the market is merciless to those who try to prove themselves smarter than the evidence. You must let the trend be your guide, following its undeniable momentum until the momentum itself begins to stall. Volume must decisively validate the price move you are observing. Without confirmation, the signal is suspect. A large price movement on thin volume indicates a weak commitment and is merely an illusion. This divergence suggests a false reading and a probable trap for the impatient crowd. The power of a true breakout is always accompanied by an increase in the number of transactions, which proves conviction. If the price is rallying but the transaction flow is shallow, I stand aside, waiting for true strength to materialize. My position will only be established when the buying or selling pressure is backed by the real weight of capital entering the market. Pivotal points are the critical markers that determine the exact entry and exit zones for serious market commitment. A pivotal point is a level where the market's character changes definitively, transitioning from a consolidation phase into a rapid, sustained movement. These points are not random support lines. They are moments of truth where the battle between buyers and sellers is momentarily resolved. This resolved point gives me the low-risk area to enter a position with the highest probability of success. It is only at this moment of confirmation that I commit my capital. Never before. The perfect moment to buy or sell is the instant the market crosses this established line. You must never, under any circumstance, average a losing position. That practice is the quickest path to absolute financial ruin. When you buy 100 shares and the price immediately drops, buying another 100 at a lower price is not intelligent risk management. Doubling down on an error merely means you are multiplying your mistake and deepening the hole you must climb out of. The first loss is the best loss, and it should be taken quickly. Without argument, I learned this lesson by wiping myself out early in my career, trying to protect my pride instead of my capital. I told myself the stock was cheap, that it had to recover, and I paid the ultimate price for my vanity. When the market tells you you are wrong, you do not argue. You liquidate your mistake and listen. You must cut your losses instantly and brutally when the stop point is reached, before a scratch becomes a painful, life-threatening gash. The original purpose of the stop loss is to protect you from the single greatest human flaw, the hope we just discussed. The market does not care how much you paid for the shares you hold. It only cares about the current price. When the lost target is breached, you do not wait, you do not hope, and you certainly do not rationalize the decline. You execute the order with the cold, clinical efficiency of a professional. If you are to be a successful speculator, You must adopt the mindset of a general who retreats from a losing battle to preserve his army for the next opportunity. The time to buy is emphatically not when a security is at its absolute low, but when the pivotal point confirms the market is ready to launch into a strong uptrend. I do not care about buying at the bargain basement price. I care about buying at the right price, which is the price that signals immediate forward movement. Waiting for the final low is an exercise in foolishness, a way for the amateur to feel clever. The professional operator waits for the market to signal its intent, not to guess at its final point of exhaustion. The highest probability trade is always initiated on a decisive breakout, not a tentative reversal. Only after the pivotal point is broken with force is the time to commit large capital. Never sell simply for the emotional gratification of taking a small, quick profit. You must let the position run until the market signals a definitive change in the trend. Profits are made not by trading constantly, but by riding the full length of a major move. The man who trades for a few quick points is a scalp operator, not a professional speculator. He will pay away all his small profits in commissions and in losses taken from impatience. When I am right, I am devastatingly right, because I hold my profitable position with iron discipline and unbreakable resolve. The market will pay you tenfold for your patience when you are on the right side of the main current. Do not accept $1 when the market intends to give you 10. You must hold your position with patience and with the courage of your convictions. All great profits are made by sitting still, not by continuous nervous action. Once the pivotal point is broken and the trade is established, I let the market do the work for me. The tendency of the amateur is to constantly intervene, checking quotes, worrying over minor fluctuations, and tinkering with his position. This constant action is ruinous. The real money in speculation is made when a trend carries your position further than you could have ever imagined. That only happens when you are disciplined enough to sit on your hands and trust your initial analysis of the line of least resistance. Do not trade unless the trend is absolutely undeniable. Ambiguity in the chart is always a signal to stand aside and preserve your capital. If I cannot clearly identify the line of least resistance as up or down, then there is no trade to be made. A market moving sideways is not a market to be involved in. It is a market of hesitation designed to frustrate and exhaust the impulsive operator. Trading under such conditions is merely a tax on your capital. The mark of a true professional is the ability to do nothing when there is nothing to do. I wait for the powerful, unmistakable current to appear, and only then do I engage the market. Only risk a small, predefined fraction of your total capital on any single, isolated trade. The protection of your principal is the first and most sacred law of speculation. The preservation of your initial capital must be your sole objective, because without it, you are out of the game entirely. I never allow any single trade, no matter how promising, to threaten my ability to return to the market tomorrow. Risk too much, and one single mistake, one unavoidable surprise will end your career. The professional operator thinks about risk first and profit second. A true commitment is never more than a small percentage of your available funds. You must avoid the siren song of tips, hot rumors, and crowd consensus. They are expressly designed to relieve you of your money and give it to the professional. The moment a tip is widely distributed, it is already too late to profit from it. The professional, who generates the tip, has already established his position and is now looking for the crowd to buy the stock from him. When everyone agrees on a stock's potential, it is time to be highly skeptical, not eager. I learned to trust only the evidence before my own eyes, the price and the volume. The voices of the crowd are merely the echo of their own fears and greed. The biggest enemy you will ever face in the market is not the competition or the vast banking houses. The enemy is your own inherent impatience and insatiable greed. These two emotions will tempt you to violate every principle of sound speculation. Greed will prevent you from taking a small necessary loss, and impatience will force you to enter a trade before the pivotal point is confirmed. You must first conquer yourself and your natural impulses before you can even attempt to conquer the market. Trading is 90% psychology and 10% mechanics. Control the mind, and the profits will follow as a natural consequence. Never attempt to anticipate the inevitable turn, whether you believe a top or a bottom is imminent. You must wait patiently for the market to confirm the reversal. The amateur tries to catch the very last fraction of a move or the first fraction of a new one. This is arrogance, and the market punishes arrogance swiftly. Your only safety lies in waiting for a clear, undeniable signal that the line of least resistance has changed. A security can always go lower than you think, and it can always go higher than you imagine. Wait for the chart to tell you the truth. Your opinions do not matter. Only the market's action is relevant. Trade the general market condition and the undeniable primary trend, not isolated news events or individual company gossip. All sectors and all individual stocks move according to the main tide of the market. A successful speculation is almost always one that aligns with the overall sentiment and direction of the broad averages. It is incredibly difficult and often fatal to attempt a short sale in a roaring bull market, even on a weak stock. Trade with the tide, not against it, and the odds of success swing decisively in your favor. Never forget that the underlying current dictates the movement of every single boat. Speculation is an exacting exercise in probability and the management of risk, not a magical prophecy or a reliance on intuition. I do not predict. I observe, I calculate, and I act based on the highest probability presented by the evidence. Intuition is merely a mask for a hunch, and a hunch is a fast track to financial trouble. The professional speculator relies on facts, the movement of price and the depth of volume. Every decision must be rooted in statistical likelihood, and every position must be managed with a defined quantitative stop-loss. Leave prophecy to the fortune tellers and focus on the evidence that is right in front of you. You must test the waters with a small initial commitment to ensure your timing and analysis are sound. Only after that small position confirms the move and generates a profit do you scale into the winner. This process of pyramiding into a successful trade is the true key to compounding capital. Crucially, you must never, ever add to a losing position. That is the very definition of averaging down into ruin scale into your profits and scale away from your losses. This method ensures that your capital is only ever multiplied when you are correct, and your losses are always kept at a minimum. The price chart is the only sermon worth hearing. You must absolutely ignore the noise of outside opinions and listen only to the pure action. The man who trades based on what he reads or what he hears is trading on delayed information that has already been discounted by the professionals. The chart is instantaneous and honest. It tells you exactly where the large commitments of money are being made and where they are being liquidated. I never speculate based on what people say they will do. I only speculate on what the market is doing right now. The tape is the definitive word, and I am its devoted student. The initial decisive move after a successful pivotal breakout provides the absolute highest probability of success. This first surge is the move where the entrenched holders are forced out and the new major trend is established. This is the moment I look for the most aggressive commitment of capital. Waiting for the market to settle down after the breakout only increases your risk and forces you to enter at a less favorable price. Precision trading means identifying this exact point of departure and climbing aboard immediately with confidence. The best move is often the one that happens fastest. Discipline is not an optional accessory for a trader. It is the fundamental mechanism that translates intellectual knowledge into lasting material wealth. You may know all the rules of speculation, but without the discipline to execute them under duress, that knowledge is useless. The difference between the winning speculator and the losing one is the ability to obey the rules they set for themselves, even when the market is terrifying or tempting. My own success was built entirely on my uncompromising commitment to my principles. Patience pays the highest dividends in speculation. The truth is that successful trading is actually 90% waiting, and only 10% of high-conviction action. I spend most of my time observing the market, waiting for the perfect setup that meets all my criteria. Do not confuse activity with productivity. The eager, restless operator who trades every day is simply ensuring his broker gets rich. The professional waits for the fat pitch. The market owes you absolutely nothing for your time, your analysis, or your effort. You must approach every single trade with total humility and respect for its unforgiving nature. The instant you believe you have mastered the market, it will teach you a lesson that empties your bank account. Humility is the greatest insurance policy. Treat the market with the deepest respect, and it may allow you to profit. Consistency of method, not the spectacular size of isolated gains, is the single element that defines the professional operator over the long term. A steady, systematic application of sound principles will always outperform the impulsive, reckless gambler. Focus on making money correctly, not on making money quickly. Your sole objective in this game is the uncompromising preservation of your operating capital. Profits are merely the natural, generous reward you receive for your strict and disciplined adherence to these fundamental principles. If these words hit you, it means you're not here by accident. Subscribe now, like this video, and leave a comment. That simple action helps more people find this content, and it tells me that my work still matters. But the battlefield of the market is the mind, not the chart. If you want to understand the true psychology of speculation, you must read the one book that defines the game I am talking about, Reminiscences of a Stock Operator. It is not historical. It is a permanent education in human nature and market cycles. The book is pure truth. Get your copy today. The link is in the description below.